This strategy I'm about to share has moved me from this to this. People that have learned it from me have moved from this to this. It's a simple style, but extremely smart trick I use to beat this market every single time. Stay to the end and watch everything about it. For you to get this video, you need to understand that candle to candle bias is trash. What I mean candle to candle bias is trash. There are a lot of traders that try to predict every daily candle or every weekly candle. They want to predict where the candle will most likely expand to. Is it going to close bullish or is it going to close bearish? Now, I consider that trash because I've tried it and I've done everything possible to make it work for me, and it does not work. These are the reasons why candle to candle bias is trash. First, the market is unpredictable. Secondly, you'd most likely lose money almost every time. Thirdly, it causes you to use up more mental energy. You can call it mental energy, you can call it mental capital. Now, I'm going to explain each of these points step by step. The first one, the market is unpredictable. Now, everybody who has been a trader for a while or even for a short while can agree with me that if the market is having a bullish swing, regardless of the time frame, it doesn't mean every single candle on this bullish swing is going to be bullish. And the market is on a bearish impulse down, it doesn't mean every single candle in that swing to the downside is going to have all bearish candles. So what that means is, if you are doing candle to candlestick analysis, let me use a very fresh chart to show you some things you need to really get. Now we have a bullish move to this side, okay, to the upside, and as you can see, we have mixture of bullish and bearish candles. So how are you really going to be accurate knowing what the next candle will actually be in a market condition like this? Think about it. Or what about a case like this, whereby we see that sell side liquidity has been purged and most ICT traders will be expecting price to trade back to this high. And as you can see, we have many down candles. In fact, after this purge, many people will try to buy on this day, but they get clapped. To try to buy on this day, they'll get clapped, and they might start thinking price wants to keep selling, and then we start getting a buy. And even when you look at this swing to the upside, you find out that there are many down candles in it. You have this, you have this, you have this, you have this. All of these candles are going to lure you, make you really confused, and where price is actually drawing from. And there will be many traders out there that will try to trade off this FVG, try to sell inside this FVG, and will keep getting clapped because the candles are keep forming bullish right inside. The second reason why candlestick to candlestick bias is trash is that you most likely lose money, and that's what I'm trying to talk about. Everybody knows their entry model, their turtle soup. Some people use silver bullet, some people use the 2022 model. Trust me, if you keep applying those models, trying to short the market while the market has plans of doing something else, you keep losing, and you can lose 5 trades in a day because you think the market is going to create a bullish candle because it was supposed to be going up, and what happens is at the end of the day it creates a bearish candle. But while it's trying to form that bearish candle, you're trying to buy like many times of the day and keep losing till you blow your account, trying the whole kind of bullish entry models ever on the lower time frames, and they won't just work. It causes you to use up more mental energy. So what this means is in trading, mental energy or mental capital is way more important than even your financial capital, like your forex equity. Because mental capital is, if you have exposed yourself to too much losses, you overthink your next trade. If you are just in the losing streak, it makes you doubt if trading is going to work for you. It makes you even have the tendency to go on even more tilt. And every trader needs to be aware of their mental capital and preserve it. Solution: focus on structure, and remember, the trend is your friend. Go back to the basics. See, the basics remains the best way to get your draw. So now let's go back to the basics. If we know the market moves in higher highs and higher lows, So what you need to do consistently is make use of these three powerful time frames. I say it in all my videos: the daily, the weekly, the daily, and the 4 hour. Okay, if you make use of these three powerful time frames to understand what phase you are in this trend, you'll be able to have a straight up simple bias. So if this is how the market moves and you come and the market is in this phase, you're anticipating a retracement. If you come to that pair or to that chart and the market is in this phase, you need way more retracement. So what retracement are you retracing to? A valid point of interest that has been refined from that particular time frame till the smallest time frame, which I call the 5 minutes is the smallest time frame I go. That's it. Now, if you come to the market and you see it in this phase, what is the next direction you're anticipating? Higher, to continue up. That's it. Another example, if you come to the market and you are in this phase again, you're anticipating a retracement. If you come to the market and you are in this phase but no point of interest, no verified point of interest on the left. When I mean verified, any point of interest that cannot be refined from that higher time frame down to the 5 minutes is considered as unverified POI. And when you don't see any of them, then this becomes your next draw, this low, because price will literally change structure. And that's it. And when price really gets to this point, we know our draw is lower because we have now flipped bearish. So if you come to the market and you see price in this phase, you know the next draw is a retracement to a valid POI. If you come and you see price in this state, you know the next draw is for price to drop, to continue. That's it. Now, what's killing a lot of traders? They want to be in the market 24 hours every day. Now, you need to know you only have to create a time schedule, a time zone when you come to the market. Currently, so I've been able to help a lot of traders achieve their dreams by learning how to get their daily bias correctly and applying the right entry model. And before you proceed into this video, you just have to look at this. This person just had his phase 1 passed not long ago. It's my VIP student and he trades exactly what I'm about to show you. This person right here you see just got a withdrawal, a payout from 10 trades prop firm, and he trades directly with me in the VIP money room. He takes my trades, he trades together with me live, and we do the same thing every single day. This guy right here had his first withdrawal. I remember when he joined the mentorship, he had no idea about how to trade Forex. And in few months, this is it. You can see him. He said, God bless the day I DM you. See, there are many testimonials in this student achievement. I just started documenting every damn testimonial from my student, and it's endless. So what you need to know is the mentorship carries everything you need to know about ICT concept, and a lot of people have learned this way of trading from me and I've seen massive results. If you want to get massive results and change your trading, the private mentorship is open. The first link on the description is my DM on Telegram. Slide in that DM and send Forex to me and we're gonna discuss. It has always been 12 p.m. to 4 p.m. but as at the time, like Nigerian time, West African time, but as at the time I'm making this video, Nigerian time is 1 hour ahead. This is November, so it has changed to 1 p.m. to 5 p.m. West African time. That's literally the best time. That's New York Q zone according to ICT. This is in Nigerian time. In EST, it's literally 7 a.m. Eastern time to 10 to 11 a.m. Eastern time. But I need you to get this right. If you only come to the market by this time and check what phase you are in, you are good to go. You know the next phase of that structure to target. Period. Is it difficult? No. Now let's continue to make it let me do a little bit of more illustration. So if you come to the chart and you are in this phase, now there are times when the market is not ready to pull back and it's just going to keep buying higher and higher. So what gives you that conviction that a pullback wants to happen is that you're going to have a lower time frame change of character like this, around this area, okay, around this area, right? You're going to have a lower time frame change of character. Let me draw it again. Around this area, literally. So what happens is that around this area, when you see this, you know a retracement is coming. So you start looking at a bearish bias and you start applying your bearish entry models, period. Now, if price is coming down and there is a verified point of interest on the way, I don't care whether it's not deep enough. I'm not trying to do premium discount shit right now. Like, forget about those things. I don't care what POI it is, as long as it's verified that it can be refined from where it is to a lower time frame. And I mean refined, if you check inside the zone, there are other PDRAs inside the zone on the lower time frames. If it can be refined down to 5 minutes time frame, then your next drop becomes here. We need to continue the trend. That's it. As easy as ABC. Okay. That's it. As easy as ABC. So at this point, your bias becomes bullish. You keep applying all your bullish bias. Now, how do you combine all these 3 time frames to give you the same thing? So I'm gonna do something easy for you to get. So now, how do you combine these time frames? So if, for instance, the weekly is bullish, okay, is in this phase, definitely your daily will be in this phase also, because this whole swing is equal to this whole swing, right? Like I'm talking about this is equal to this. And what will your 4 hours be doing right now? Your 4 hours will be this latest swing is gonna be your 4-hour bullish swing. Now, let me circle it. This is equal to this, right? So what we need to understand is that on the daily, if we have not had a change of character, sorry, on the weekly, this is weekly. If you have not had a change of character on the daily, we can't call this a weekly high, so we are not going to anticipate any retracement. And here too, if this has no high, it's solely because we have not had a change of character on the 4 hours. So if you have a change of character on the 4 hours, therefore daily will be ready for retracement. So we apply our bearish entry models, even if the weekly is like this. Because if we keep applying that entry models and we get to a verified point of interest on the daily, which is here, would literally start pulling up once we get to that verified point of interest, period, right? Now, on the 4 hours, in this kind of case, when we broke structure, it's clear that if we don't have an established low here, when I mean an established low, is when the 15 minutes fails to do a change of character, because this same thing I'm doing applies for a bearish trend, because this whole swing on the 15 minutes is another bearish higher lows, right? So if we happen to do a change of character here, it means this is a low. But in this kind of aggressive pullback, in most cases, we are not going to have what? A chalk on the 15 minutes. So what happens is we just apply our sell entry model towards that really big area on the daily. Most likely going to be showing like this on the daily, really big area. You're just going to what? Sell in. I'm not going to talk about your entry models right now. If you have issues with entry models, go watch this video right here. You're going to learn how to enter properly, but in any direction you want. But now we're learning about entries, and this is how it works. Now, if price fails this POI and just keeps going down and down, once it fails this POI, we are targeting the next POI on this level. Now, if there is no POI around here, if there is no verified, please emphasis on verified, because if it's not verified, then it's nothing. If there is no verified POI here, then our next jaw becomes here. And if our next jaw becomes here, we'll keep selling, right? Even if as time goes on, we had a change of character on the 15 minutes here, even if such kind of thing happens, what will happen on the 4 hours? We would wait, because we are actually operating on a down move right now on the higher time frame daily. So we're gonna wait for price to retrace to a valid 4-hour verified point of interest. If this happens, then we know a retracement is going to happen upwards. So when it retraces to that valid POI, we'll continue our sales from that POI, because we have to keep going lower, right? We have to keep going even lower, because we are now coming for this low. Now immediately we come for this low, then we know the weekly is ready for a big retracement. The weekly is going to try to start retracing, because where is our weekly going to retrace to now? All our direction is going to be dependent on the verified POI on that weekly swing that we're going to go to. That's it. So that's where the whole focus is going to be. So daily, we will not have an established low if the 4 hours doesn't do a chalk around here, because this is going to be a full 4-hour bearish trend that's going to go on for some time. Okay, we're going to keep having something like this, 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 right, on the 4 hours, because we are going down. All right, and in as much as this trend continues, the daily will impossibly keep going down till it gets to this POI on the weekly that's going to look larger right here. So this is the whole point of action. So let's go into the chart work and see how you can apply this. So I'm going to clear my chart and I'm going to mark out my structure for you guys on Euro USD, starting from the monthly, the way I do it, right? So when I'm marking the monthly, I use a separate color of lines, because it literally make you understand that this is my external structure on the monthly, right? So I'll just make it purple, make it thin, and that's it. Now we're going to focus on the internal structure. What the internal structure is on the monthly is we having these small structures internally. So it's simple for you to get the internal structures. Look at the most recent dealing range between this high and this low, because this high led to the break of this old low. So this is the new low, old high, and we are in this dealing range right here. So we want to look in between it to catch every small highs and lows we have inside and map it correctly, because if you start mapping this accurately from here, you find out that yes, this is a structure high, low, new high, low. So we are in this dealing range, and I make sure all of them are purple, right? Sorry, are deep yellow, to make it distinguish from the externals. So what I do on the weekly is, between this high and this low, I want to find high and lows between this, because we're in the weekly time frame, and those are going to be my weekly structures, right? So I don't care about external, internal on the weekly. Nah, I don't do that, right? I only care about the structure the way it is. I only do external and internal on the monthly time frame. So here we have these structures right here, and I'm not going to go too far. I'm just going to stop here and talk about what transpired from this point till this point. Okay, that's what I want to talk about, right? Or we can talk about from this point to this point, right? Any of them. But let's talk about this point first, because it looks really, really complicated. So I want to talk about the complicated thing the most, so that I can get exactly what I mean. So now we are in this weekly structure, and I like marking my weekly structure as black to distinguish. So let's see. So we are in this weekly structure. So in this weekly structure, what you want to do is, where are we currently at this level? How were you going to know price is going to start reversing? Because now we don't want to do candlestick analysis. We want to see how we're going to know price is going to reverse from here. So I'm going to take off my use replay button to show you something from here. So now I'll take off this line, because what qualifies this to be a low is when we have a change of character on the daily. So let's go mark the daily structures, right? Let's go and mark it. So we have all these structures here, here, here. And take notes. Take notes really well. So now we have these daily structures. Now, for us to consider this a black low, okay, which is a weekly low, as I call it black, we need to have price go all the way above this high right here for here to become black. That's exactly how it should be. But for now, why is this red? It's red because there's a daily change of character around here. So let's go and verify. So as you can see, the market was very bearish on the 4 hours, right? So if we are actually looking at it from this angle, I mark my 4 hours with green. So let's see. Let's see. Bearish structures. Bearish structures. Okay. Bearish structures. This is where the change of character happens on the 4 hours. At this point, we made a low, we made a high, we made a lower low, and price took out this high. So that's why here is red, because we have done a chalk. So now, how do we know we're going to buy? This is exactly how I knew we're going to buy. Because when we have broken structure right here on this day, okay, all you want to do is come to your trading time. When is your trading time? So now let's look at it. I spoke about our trading time because this is April price action. So our trading time starts 12 p.m. till 4 p.m. So what you want to do, you want to check what phase of structure are we on the 4 hours. That's what you want to do. So this pink area right here is actually the beginning of my what do you call it, of my session. Okay, so all I want to do in this session, I want to come on that session and analyze what phase are we in structure. So I put my line right here, and I'm going to stop by 14 o'clock Nigerian time. Okay, this is my trading time, and all I have to do is what phase of structure are we in, period. So if you come to the 4-hour chart, by this exact time, you will be seeing that we have done something like this. We have made a new high here, and in as much as that new high can be verified on the 15 minutes, look at it, as it has led to a change of character, because this is where it did a change of character here on the 15 minutes. I'm going to make it this color right here. It did a change of color, a change of character right there. So therefore, this is qualified to be a 4-hour high to me. So what should price do? Yes, we are bullish, but at this point we have made a 4-hour high, so we need a retracement to a verified POI, and I think this rejection block served as it. And what do you see right now? Price is pulling up from here. So if you come during the New York session, you want to apply your entry model. Now if you trade the London also, which is the London time for Nigeria here is 7 a.m. till 7 a.m. till 10 a.m. right? If you want to trade the London session too, fine and good. But one thing you need to understand is you should stick to one session. Okay. Now, if you want to trade the London session, you will most likely be in this trade, because when you come on your London, which is this blue area, you see you apply your entry model and you see how price went up. But there was poor volume during the New York, which is this pink area right here. There was really poor volume, but definitely this draw is the next draw to be hit. So even if there's poor volume, later the volume picked up the next day. Now let's see whether price is going to hit that draw. Do you see how price hits this draw? So do you need to stress? No. Come to your session, apply your bullish model. That's it. So on this day, as you can see, the bullish model didn't work. I don't know what model you use, but I'm not going to be talking about entry right here, but I think there was some sort of sweep around here. So let's check these two lows, which one is lower than the other, so I can know if there was some sort of sweep here. Okay, there was no sweep before that pull up to the upside, right? But during the London, there was price trading into this fair value gap and even into this fair value gap, and you can see the explosion upward. But during the New York, there was no volume. Then on this particular day, the London had no volume, and the London, maybe people that took this sweep and the rest of them might have lost money or didn't work out. But you can see the New York worked out perfectly. There was a sweep, and I'm not going to talk about entry model again, but you just need to see how a bullish model will always work, because that is the next draw we need to be headed to. So now let's continue. How do we know we are going to be heading up? Go back to the roots. How do we know we are going to be heading up? Let's go back to the roots. The root is that we are bearish on the weekly time frame, and that's fine and good. But then on the daily time frame, we have created a low, meaning a 4-hour chalk has happened. And when we create a low, what price usually do is it will start retracing to the nearest verified POI, and we had this right here. So on the daily, this became the major draw. Okay, on the daily, this became the major draw, right? So we would keep buying till price gets here, and when we keep buying for a long time, and price gets here and decides to fill this point, and even we now cross this daily point, this is when here gets black. And when it gets black, it's clear that it's time for us to what, pull back to a weekly POI. And that's where a weekly POI is going to come to play, more like maybe this rejection block, this other block, whatever. If none of them have the ability to hold, then price is literally coming to this old high on the weekly time. So any time frame that has a low established, whereby the smaller time frame led to a chalk, we move to the next POI. That is it. We are on a bearish market on the daily. And what phase are we trying to trade? A retracement. Now, if price holds in this place, the next place we're going to trade is to get to this low. But if price doesn't hold here, we're going to keep going higher. That's literally it. So till price gets here on the 4 hours, I want to keep respecting 4-hour structures, right? Now on this day, we just took out this high. Some people would think they want to start selling and all of that stuff, but you get clapped because the overall direction we're headed to is here. So as a smart trader, you want to come during your trading time, I do say this every time, and apply your bullish entry model. Now, first things first, if you are okay, this whole move happened in London today. So let's say if you trade New York session, let's play it till it's in New York time. Okay, so the New York time starts by here. So all you want to go and do by this time, you want to find out if this high is qualified to be a 4-hour high. So you go to your 15 minutes and check it out. Okay, you want to check if it led to a 15 minutes chalk. This high led to any 15 minutes chalk. As you can see, it didn't. No 15 minutes chalk. So you're not going to be expecting price now to retrace to any POI on the 4 hours. You don't need that. Okay, if this is your case whereby this high did not lead to any 15 minutes change of character, you don't need a 4-hour POI. All you just need is to come and apply your entry model, and we are exploding to that level. And that's just it basically. And when you come, you apply your entry model, and you see how price is going to explode higher. And as you can see, price keeps going higher. Everybody has their entry model, what works, but I've already said the video that would help you improve your entry model. Go watch it and study it and apply it to this logic. And as you can see, this is how price will keep going up till it gets to that draw. I don't care what it does every day, but all you have to do, come and apply your bullish entry model every single time where it matters. Now, be warned, if your 4 hours has not printed, if your 4 hours has printed a high, you must allow it return to a 4-hour POI. Now, like this day, I can notice it happened, right? So let's go to the 4 hours and peep. Very good. This high led to a 15 minutes chalk, and you can see price had to return to an FVG on the 4 hours first before buying. And this is what will make you lose if you don't wait for this. But you can ignore price returning to a 4-hour POI if this high does not lead to a 15 minutes change of character. I keep saying it over and over again, because if you don't study this properly and you just go and apply it, you will lose. The same thing with this high. It led towards a 15 minutes change of character. Let's go and peep. Do you see that high? Do you see that it led towards a chalk on the 15 minutes time frame? Did you see that? So that's why it needed to retrace to a 4-hour POI. And that's what you need to wait for before applying your entry model. Yes. during your New York time. Come to the chat. This pink time is my New York time. From 12 when it starts, it ends by what? 4. You apply your entry model, and I do hold my trade till after Q zone because I know this is the next draw, and it might take more than a day, but as long as that's the draw, would actually still get there. Period. So, guys, this is for you. Study and apply. Before I end this video, look at this. We have the free Forex channel. So if you go on the description, you're gonna see it. This is the channel, t.me Blue Kings Academy, right? Now, what do I do here? I talk about my bias for the day. I drop my setups. I also drop my signals. Like the last signals I did was this on the 1st of November. Okay, and I've not traded ever after that date now. This is 6th of November. Because of the US election, I've just been, avoiding the markets. I'm going to be back today, which is 6th. So this is November 1st, and I did a signal. USD card buys 9.8 pips, stop loss 3 RTP, and this is the trade, the outcome of the trade. Everybody was happy. Everybody took the trade, right? Actually, I call actual figures on the paid groups. The actual as you can see, the actual figures of the entries and the stop loss. You can see everything right here. Good. So this is exactly the paid group, but this is the free channel. You can get as much value in it. Join the free channel and stay in line with me. Peace.